Hey traders, it's Hima here, and I've got chart of the week, earnings updates across sectors. Today's Thursday, April 30th, 2020. Now, before we take a look at the charts, an important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So, with the world as it is right now, this earnings season reporting Q1 2020 results and giving guidance for the future is extremely important for stock investors and traders. Now, over the next several days and even weeks, we continue to have earnings reports, this week being the biggest with the FANG stocks. And I'll be covering where I see FANG stocks going in my next Skinny Markets Outlook, so keep an eye out for that coming out soon. Now, I looked at one of my favorite resources for being up to speed on earnings, updates, scheduling, etc. And that is in your portal as a Flash Tribe tip if you've come in and gotten your Tribe video fast enough. Remember, Flash Tribe tips are a quick flash there for 24 hours or less. Now, coming to this list of stocks, I'm starting with CVX, Chevron. And I have my moving average filters on top of them, as well as my RSI Power Zones indicator. Both are detailed in the 4 Zones RSI coverage system. Now, before we dive into the 10 stocks that I have set out to look at, which are reporting earnings over the next several days, I'm actually going to start by doing a quick zip through the stocks and tickers that we covered in our latest bonus monthly group coaching live on Wednesday, April 29th. And I'm doing that because I want you to just watch the price action and the moving average filters to just get a sense of how they feel. So I'm just quickly going to go through those tickers on the right, and you're just look through that. I'll just say them as I go through. So we've got the pound yen, oil, Nike, E-mini Russell, HAIL, INSG, American Airlines, copper, ENPH, bonds, Boeing, EuroCAD, Marathon, E-mini NASDAQ. And once you look at those tickers, more importantly, looking at the moving average filters, it gives you a sense of how these move. So if you're newer to moving averages, very important pro tip of mine. Moving averages are best for helping you get a sense of the current forces underneath the market and the direction that might persist. They're not great for crossover signals, okay? Even exponential ones like the ones I use, they're still late compared to the price action. So they're an extra help when it comes to trend assessment, but I don't make them my main source of trend review. All right, so now let's come back to that ticker Chevron. Again, all of these stocks I'm about to go through reporting the next several days. Make sure you are up to speed on the earnings report, data going into it, and do your own due diligence. We're just looking at the chart here with moving average filter, momentum, and candlesticks. I'm not going to draw a single thing on here. I want to show you how quickly you can make assessments about price action, momentum, and more just by learning to observe your charts, okay? And it's a good test for yourself to scan through a bunch of stocks with the strategies you know and see what you ascertain. So just looking at CVX right here, and I'll use my mouse to guide you, I just see an uptrend in motion, higher highs and higher lows. And the first thing that I notice is that there's this longer term moving average up above. And if I look at the past price action, that moving average is near an old low. So that's all I need to know, is that that's a pretty important resistance level. If you look at the downside, right now we're at the bear resistance power zone. We're potentially coming off of yesterday's high. You can see there's a recent higher low down here. That's it, as a cursory initial analysis. Okay, so those are the big ones jumping out, and there's smaller levels along the way. Notice also that these two smaller, shorter moving averages are starting to converge. They might end up creating an area of support if that continues to happen. HON. Like many other stocks, Honeywell looks similar, recovering off of late March lows. It also has a ways to go to get up to its longer-term moving average and old bottom. This has a little bit more of a tighter price pattern. You can see these higher lows, but they're not being accompanied by big, strong moves higher. And there's an old bottom right here that might prevent further upside, in line with RSI power zones being back at the bear resistance power zone. So potential to continue to edge higher, but with limited upside momentum given the old bottom and then the moving average and old bottom beyond that. Clorox. Clorox has had a very wild ride these past few months, obviously because of its type of service and products it provides and the world that we're in. Now, there was a sharp fall and then a recovery higher that is now correcting, and it's correcting back in between my two shorter term moving averages, in line with RSI power zones being the bull support power zone. So there's a cushion here in which Clorox might turn higher, again, potentially boosted by the way earnings turn out. So the next resistance levels, I would look at these three highs. It's like a bar-to-bar triple high or triple top in that $200 area. That's very important resistance in the $200 area. Lowe's is recovering, but not quite as strong as the other tickers we just looked at. It has experienced a drawdown after attempting a move higher. It still has moving averages that are all pointing down and they're far away from each other. So this is not a stock I would look to buy anytime soon. Tyson Foods. Tyson has an interesting narrowing, consolidation. So you can see lower highs, higher lows coming in. It's kind of hanging out at neutral in the RSI power zones. And the two shorter term moving averages are pushing together. They're narrowing. So this feeds into this consolidation persisting. I would watch for a daily closing break significantly in either direction before taking any new action. Lending Tree. This is a chart that looks a little different than the rest. It's been in a downtrend. You can see these big moves, these big drives higher and lower. The latest recovery, if I eyeball it, looks like it's recovered about half of this fall. You can draw the retracement. And right now it's above the two shorter term moving averages, but still has upside resistance at the longer term, which is also near an old bottom. So that is an overhead level to watch as potential resistance. Wayfair has exceeded a past high, which was shaping a downtrend for the past several months. So it's doing really well. Right now it's consolidating all of the past few days or in one bar's range. So that gives you a nice clean area to define a high and a low for a breakout. If you get a closing break above that range high, might see further upside. If you get a closing break below, it might be a good chance to take advantage of relieving overbought conditions and look to buy on a pullback. So Shopify is up at new highs, right? Well beyond any of the moving averages. RSI power zones have yet to post a new high. So with the current price action all tied up within this one giant bar range, I'd be on the lookout for a pullback. I don't think it's as safe a bet to act on a breakout to the upside. CVS has been recovering higher. It's back at its longer term moving average and above its shorter term moving averages, but still in a little bit of an indecision mode. And right now, RSI is back at the bear resistance power zone and hinting that it wants to move lower. So look at the most recent daily high or low, which is maintaining the uptrend. I would watch that level before taking action on any shorts with big positions. And if you're looking to buy or take action the upside, I think it's too soon. I would rather see it clear not only this top, but also this old bottom, that range, before building longer term positions. Last but not least, FLIR. This looks a lot like the earlier tickers we looked at. Recovering higher, much closer to its longer term moving average resistance and old bottom. Notice how they're very much in the same area and maintaining higher lows on the daily chart. So keep an eye out over the next several days. It's at an inflection point where it could overtake the long-term moving average and continue higher, potentially towards this old bottom, so this $52, $53 area. If it's not able to overtake that moving average, watch out, and again, keep your eye on your last recent daily high or low. So there you go. I challenged myself and I did it. I did analysis without making a single mark, drawing a single line. Now, this is a good initial practice Of course, it's always a good idea to come back and revisit your analysis and make sure you mark down, annotate what you're observing. I just wanted to show you that it's not about drawing 100 different lines or having 100 different indicators on your chart. It's a matter of understanding what's in front of your eyes. All right. So with that, be prepared for all the opportunities that may continue to emerge this earnings season. Those of you who are looking to learn more about forecasting and taking price and time and working with them together, keep an eye out on your email for updates on some trainings I have coming up. And I'll catch you next time. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.